You've got investors who are putting money in both gold and Bitcoin, and that the US dollar being weaker is making Bitcoin stronger as well. And so it's a long way of saying that the decoupling, I appreciate it. I like it. I want to see it continue. And we're going to have to see, weeks and months of this for it to really hold. But it's that information, understanding arbitrage you were talking about, and that's really what's going to drive this long term. And that's going to make people understand that Bitcoin is something that should be allocated separate to every other asset class out there.
James Lavish opens by setting the macroeconomic stage. He poses a scenario that's becoming increasingly plausible. What if the stock market doesn't just dip, but completely blows up? According to Lavish, if such a crash occurs, we would be staring directly into the eyes of a deep recession. The only foreseeable way out of that recession? You guessed it, printing more money. But this doesn't come without serious consequences.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If the stock market blows up, really blows up, we are headed for a deep recession. And the only way we can pull out of that is by printing more money. So what happens to bond yields? Bond yields will go up in that scenario because the bond traders, the vigilantes, are going to want to be compensated for the clear and obvious inflation that's going to come from another expansion of the money supply. And so that's the issue here. So do bond yields go down to 2% because we just slowly grind into a recession here? Or do they spike up to 5-6% because we have blown up the economy and the Fed's turning around and printing money to oblivion to save it? It's a good question. And that's why you're seeing a lot of uncertainty in the market. People don't know where we are on that spectrum. And some of it has to do with, headlines and a tweet, from Trump. He could just tweet something that just spooks the market to the point where, you have the NASDAQ sell off 3 or 4%. Oh, well, look at that. It's down 2.5% today. It was down over 3% earlier, I believe. But here's the telling thing. The telling thing is that bonds are not acting like they should as a flight to safety. That's number one. And number two, gold is absolutely ripping higher, rocketing higher, because it is a flight to safety. And investors are looking for a place to put money to just protect it. And gold has been a strong store of value for centuries. And now we get to the question about Bitcoin. And Bitcoin diverging today is very interesting. It's interesting because is it following gold? Is it finally, are people just realizing, like you said, that arbitrage, is that closing, that understanding arbitrage? Is it just because the dollar is so weak, which means that the dollar Bitcoin price goes up? That's part of it. So I think it's a combination of things, Marty. First of all, I think, unless we get another meltdown of the market where everything correlates to one, and that's just reality. The only thing that may not go down in that case is gold, but I think that even gold would, because when everything correlates to one, it means that you're getting margin calls everywhere, and you sell what you can, not what you want to, and so everything ends up going down because you have to get cash to meet margin calls because everybody's levered. So in that case, Bitcoin will go down. But as it stands here today, it appears we've hit a local bottom in Bitcoin down at the $75,000 range, and we've recovered from that, and now we're bumping up against some serious resistance at the $88,000-$90,000 level, and we've got to kind of break through that mentally and hold that for this to stand. But I think that Bitcoin's catching a wave like similar to gold, where you've got investors who are putting money in both gold and Bitcoin, and that the US dollar being weaker is making Bitcoin stronger as well. And so it's a long way of saying that the decoupling, I appreciate it. I like it. I want to see it continue. And we're going to have to see, weeks and months of this for it to really hold. But it's that information understanding arbitrage you were talking about. And that's really what's going to drive this long term. And that's going to make people understand that Bitcoin is something that should be allocated separate to every other asset class out there. The smart investors start reallocating money out of bonds and into Bitcoin. And then that's it. That's like Bitcoin will gain so many assets. Like it will be the total market value could double, very rapidly. Now I still believe that's a little bit of ways off because of what you said in your tweet earlier, your post earlier, which is there's an understanding arbitrage, there's an information arbitrage. People are not getting it yet. But when they do, and it does decouple completely and it starts acting a lot more like gold does, but it's gold on rocket fuel because it's in its adoption phase. And of course it's going to have its volatility because any asset in adoption phase is going to have a volatility. But volatility to the upside, of course, you and I have talked about this both before, it's a gift. A volatility is actually attractive in a rising asset because it gives you the opportunity to dollar cost average in or find spots that if you're a savvy investor, to find spots to add extra capital during those super volatile periods. So I believe that that's the key though. When you start seeing investors reallocate out of bond portfolios or out of their bond allocation into Bitcoin, man, that's it. That's going to be that to me is where that's really that's the pool that once Bitcoin starts drawing from, it's a $330 trillion pool. Once Bitcoin starts drawing from that, lights out, game over, watch out. I would not be short this thing.
Lavish hints that the U.S. may even be preparing to issue Bitcoin bonds, a potential revolutionary tool to stabilize the treasury market while monetizing Bitcoin at a sovereign level. This could be critical if the Fed continues to prop up the market with endless liquidity. Investors and pension funds can't survive unless their returns keep pace with inflation, and they're beginning to realize traditional bonds won't cut it. He also warns that other nations are watching closely. While the public focus might be on tariffs and trade wars, behind the scenes, countries are evaluating Bitcoin through the lens of national security and financial sovereignty. Some may already be mining and accumulating quietly, evidenced by the surging hash rate, much of which isn't coming from public miners.
And that's it, the game theory. And that goes back to, the United States is signaling a very strong signal that they're going to be buying Bitcoin here at some point. And it's, we've got people in the administration who understand it. I don't know how well Trump understands it. That's kind of beside the point. But Senator Lummis understands it. Besant understands it. Lutnick understands it. Like, these guys get it. They understand what this is and how important it can be. And so we were talking about before, the Bitcoin bonds. Yeah, that could be a very important way for us to monetize this new asset for the United States and stabilize a treasury market that could get unruly here if we continue down this path of money printing to save the treasury market over and over and over again. And so treasury traders, investors are going to demand, they're going to need a higher return. Pension funds can't meet their obligations unless they have a return that's matching inflation or better. So that becomes a big challenge for them. So the point is that other nations they're not asleep at the switch here. They're watching this. There's a lot of confusion, a lot of noise about the tariffs and all that stuff, but they're listening to what the United States is doing. They're watching this. They're saying, man, if they corner this Bitcoin market, and it really does continue to be nation state level resistant because of the amount of energy it would take to, create a fork or whatever, then they have no choice. That's the game theory right there. But to just start doing anything they can to accumulate themselves now. And I believe that has begun. I don't know how how large, how widespread that is. We could just have a couple very large nation states doing it, and that's why hash rate is screaming higher. But it's not the public miners that are doing it. They're not out there pushing hash rate up like this. It just doesn't make sense. We were talking this morning on a different show, on the Macro Monday show, and Dave Weisberg brought up a great point that over the weekend, Charles Schwab talked about having a platform to trade crypto. And, I've been talking about this for a number of months now, that SAB 121, the full repeal of that through issuing SAB 122, for those who do not know what I'm talking about, this is where the Fed a couple years ago did an end zone run around legislation, and they put out this bulletin that basically said that banks had to hold Bitcoin as had to hold Bitcoin and crypto as a liability on their balance sheet, even if it was just on the customer's account. So it basically prevented banks from dealing at all in crypto, and this was kind of an aspect of choke point 2.0, where they just didn't want the banks to be involved. And you can kind of speculate who would be driving that, but up in DC, it's clear that Elizabeth Warren and her anti-crypto army were a very big part of all this, because when the Fed did that, and then a number of months later, almost a year later, I think, Congress met, and both Congress and the Senate passed legislation to repeal SAB 121, which is that bulletin, and then it got to Biden's desk, and he vetoed the repeal, and that was clearly he was pushed and advised by that psycho, the psychopath from Massachusetts, Elizabeth Warren, who has she has done nothing good for this country, clearly. Just a lot of talk and a lot of, money going into her pockets. Insane. I don't know how Massachusetts keeps voting for that person, but in any case, he was advised by her team and other teams to repeal it, to veto that repeal. Finally, we get Trump come in. Trump comes into the office. Gensler resigns. A new bulletin comes out, SAB 122, that repeals SAB 121 and says that banks can own and hold crypto and Bitcoin for customers without having to put it in as a liability on their balance sheet. And so now that's a very, 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 very big deal. It's a really big deal because you will have banks like Chase and Citigroup and Wells Fargo start dabbling into this space, especially in Bitcoin. And I expect other ones. I expect Ethereum and Solana and other ones, but they're going to start dabbling in these and allowing customers to buy and hold them right there at the bank, which is new. This is huge, because you don't need a brokerage account. You can do it right there. You can do it right to your bank there, and they'll hold it for you. Like, this is going to be a big deal, and I think it's underappreciated just how important it is that banks will now get into this game. And this is part of the first they fight you, right? And then at the end they join you, and here they are. They're right on the cusp of that, and that's a big deal. So that could be part of this too. But I think that
Lavish sees this as the next domino to fall. It's a massive step toward mainstream adoption. The legacy system fought Bitcoin every step of the way, but as the saying goes, first they ignore you, Then they laugh at you, then they fight you, then you win. With banks entering the Bitcoin space, we've just entered the then you win phase. Please like and subscribe.